Hey guys, hope you had a great weekend. I'm going to start right off with Apple. Great week last week. One of the strongest weeks of the year, actually. If you go to the weekly chart, you can see that. It had a very, very nice green candle. That's 3 weeks in a row. It's been on the upswing after hitting that low area of 116. Now we're looking at pushing the area of 135 now. Earnings are in a few weeks, and it's possible, given the trajectory of the move from last week, we see around 140 prior to the earning report, right? So that'd be about a $7 move to the upside. Option prices are increasing on the call side as well as we've had this move. If you're not already in it and you missed that swing from 116 or 120 area to the current price, asymmetry of risk is not as good anymore. But that being said, doesn't mean you can't trade it into earnings as well. Looking at the annual chart on the daily, you can see that we've had a lot of upside the last 6 sessions or so. And if we get any kind of pullback down to around 128, 127, which is likely to retest this area right here, the previous high from on March 16th at 127.22, that would be a decent entry point into the earning expiration. Looking at the option chain there, pulling it up right now. So I would go to the May OPEX, which is May 21st. And you're going to want to look at probably doing spreads, given that the IV has elevated now. I mentioned a couple of weeks ago that IV was pretty low on Apple, and that was the time to buy. But if you haven't already gotten in, wait for a pullback perhaps, and then go long. I think they're going to have a good quarter. They had some information come out last week about their iPhone sales doing very, very well, and that's likely to carry forward going for the coming quarters, right? Keep in mind they're going to be announcing new MacBooks with possibly an M2 chip in the next few months, as well as new iPhones coming out end of the summer, and that will be another catalyst, the upside. Who knows what else they're working on, but it's Apple, right? They're always churning and burning new products and making us spend money, right? So looking at the May OPEX, we can see that if we have a thesis of it hitting all-time highs prior to earnings, may want to play a call spread over here. So long 135, short 145, risking about $3 or so if it shows up right here. It's about $3 risk to make a maximum profit of $7. So roughly 2.33 reward per unit of risk. And your break even would be around 138 or so, right? Alternatively, if you want to play that, you can also combine that with a cash secured put at around the 125 strike, selling that, assuming you don't mind owning shares at 125 or so. That would reduce your overall debit down from 3 to about 80 cents. So you'd be risking 80 cents to make a maximum profit of 920. Obviously, if it closes between 135 and 125, you lose 80 cents. Anything below 125, and effectively you own the stock at 125, right? Now, moving on to another name that I like a lot right now, AMD. They had a weak session on Friday after pushing up, and semis were actually weak later in the week last week as well. So it's possible we do see another pushback down to the 78 area on AMD. But that being said, earnings again are in I think about 3 weeks or so, and we should see a touch of that 87 area prior to the earning report. It's possible we push back up to all-time highs again around 100, but we may be seeing that retest now right around this area, the 78 area or so, given the weakness on Friday. As I speak right now, futures are down slightly, but that's expected given that we've seen SPY run very heavily. I'll cover that in a sec. Looking back to AMD though, so here's the option chain. If you analyze the options, I guess, again, for the May 21st expiration, again, you want to go with monthly OPEX, higher liquidity, past the earning report. You don't want to trade the same week as earnings, right? And so looking at AMD, if it pulls back down to the 78 area, you may want to look at perhaps going long 80 and short 90 again on a call spread, given that IV is going to be elevating into the earning report, right? So IV will pick up as we approach earnings, and that will cause prices to go up. So you're going to want to be hedged using spreads to offset your vega and your theta, right? Your volatility decay and your time decay as well. In this case, if you're doing the 80-90 right now, because it's in the money, it's about $4 risk to make $6 profit. Doesn't seem that great overall. But if we pull back down to 78 or so, it'll trade for around, let me see. At 78, it'll trade for around $2.50 approximately. So you'd be risking about 250 to make a maximum profit of 750, or 3-to-1 risk reward, right? Not too bad at all. I mentioned we're going to cover the SPY as well. So let's go to that right now. SPY had a crazy run in the latter part of the day, last like 10 minutes or so of trading on Friday. You can see the chart right here. It's pretty much mooned at 3 o'clock or so. It went from 409.50 to a high of 411.50. Very substantial buying there. We're getting to the area of being very, very overbought now. If you look at the 1-year chart, you can see that essentially we've run from the low point of right here to the current price right now. We're up about 7.2% in the last 2 weeks on the broad index, right? Generally speaking, when that happens, as we've seen in the past over here, for example, right? Usually you see a pullback over the following week or so, right? So I expect us to possibly have one more session or 2 more sessions to the upside. 415 is my temporary short-term top. Following that, I think we're going to see downside to approximately the 400 area. And if you zoom in on the chart, you can see that there's a gap to fill. Let me zoom in right now in a sec. 3-month chart. So gap to fill right at the 400 area, which was from 2 Fridays ago, right? That gap has to fill if you want to keep some upside in the market right here, right? The longer it goes unfilled, the higher the probability is we see a rapid pullback, right? So I want to see a pullback to 400 area, which is about $11 off the current price. That's roughly 2.5% off the current price, right? That could happen in 1 day, obviously. Looking at SPY options right now, pulling up the option chain as well, SPY. It is possible we see that 400 area. And with that in mind, April is historically a bullish month. So I would not look at the April OPEX. I would look at the May OPEX, which takes us into our earnings season, right? Earnings will start late April and carry on into end of May. And so looking at this with a target of 400 in mind, again, if you wanted to play the downside, you could play it with put spreads if you wanted to. I prefer to just be lighter on my positions overall, expecting a pullback in order to get back in. So if you're not going to be heavily invested on the long side, you're better off just waiting for the pullback to average down or add to your positions, because buying puts can be a fool's errand on occasion. That being said, the asymmetry of risk here is pretty good. Probability of profit's pretty good, and we are at all-time highs right now. So this put spread, which is about a month out or so, this costs about $2.80 maximum risk. Maximum profit is $7.20 on a 10-wide spread, right? Alternatively, if you wanted to go a little bit more bearish, but have a better asymmetry of risk with lower probability of profit, you can go out of the money and go, for example, for the 390, 380 put spread. In this case, you're risking about $1 to make a maximum profit of $9, 9-to-1 risk reward. Risk is pretty small overall. The way you play this is pretty much wait for any kind of pullback down to around 400, in which case this would go from $1 to $2 roughly, and then sell half your position to ride for free. In the event that we fall further, you have nice 9-to-1 risk reward, and you have a free position pretty much as well, right? Not too bad at all. Looking at other names, there was a request for BLDR, and that pulled back pretty heavily the last few months. Here's a chart nearing support on the 1 year. So heavy support at 11 right now. I doubt we'll crack below 11. That being said, doesn't mean we can't go back down there again. Asymmetry of risk is pretty good right here, given that it's a cheap stock price. Valuation is not bad. Similar to that, there's LAZR, Luminar Technologies, similar chart, albeit they're at $20 and change right now. So again, support right at 20 or so on Luminar. That's ticker LAZR. And these names can be played with cash secured puts when the implied volatility is elevated. So looking at the implied volatility right now on Velodyne, we can see that it's lower than historical right now. So it's not that expensive. But any kind of pullback down to the 12, 11 area, again, that could be a good time to sell some cash secured puts. Just as a reference point, the $10 cash secured puts for May OPEX right now are yielding about 35 cents. That's 35 cents risk, maximum reward for maximum risk of 965. So 0.35 over 9.65. That gives you a little return of 3.6%. Not that sexy, but you know what? For some people that they like that consistent high probability reward. So I'll put it out there for you. Obviously, do your own homework, make your own decisions. This is purely for educational purposes only and for discussion point for you to see how I think. And you can perhaps elaborate on my thought process and combine that with your own to make your own decisions, right? Looking at Luminar, LAZR, see as well that the IV is lower than the historical volatility right now, which means that options are cheaper than they are usually, right? So looking again out to the MAOPX, we can see that the 20 strike is yielding about $1.80 of premium. That means that you'd be okay with owning the stock at 20 minus 180, which is $18.20, right? And the return there would be 1.8 divided by 18.2. That's a return of 9.9% in about a month and 10 days, right? Not too bad at all for a position that has roughly a 70% probability of expiring worthless, right? If you wanted to reduce your margin impact, you could also do that using put spreads, for example, the 20-15 for a credit, but you're shaving off about 40 cents of credit there as well. Cash secured puts on stocks that are trading below 30 bucks aren't that all that risky, assuming again that you do not mind owning the stock at the strike price less the premium received. Keep in mind that every put you sell, you need to be okay with owning 100 shares at the strike price less premium received. In this case, you'd be okay with owning 100 shares of Luminar at 1820, so it'd be $1,820 of risk on your part, right? Going out now to look at tech, let's look at the Qs, triple Q ETF right now. We have not yet hit the all-time high again, which is interesting because IWM, the Russell hit their all-time high, and SPY hit its all-time high as well, right? And if you recall, a few weeks ago, I mentioned to you guys that these pullbacks on tech are great buying opportunities, right? We saw one over here, a pullback of about, 11%, followed by a nice rally of 25%, right? Here, everyone was freaking out a few weeks ago on the pullback of 12.2%. I simply said, guys, it's a great chance to buy Amazon, Apple. I'm not a big fan of Facebook, although Facebook has ran very hard. Netflix, A&D, all these names have done pretty well the last week or so, and there is some more upside to be had in AMD and Apple, as I mentioned before. But still, we're not at all-time highs yet, right? The all-time high is 338.19 on triple Q. So it's possible we hit that this week. That could carry SPY a bit higher to that 415 mark I mentioned before, but I do think we're going to run out of gas pretty soon because we are very, very heavily overbought. And that could mean we get a sharp correction down back on tech. There's a few gap fills to be had here. And I would say we'd pull back perhaps to 320 or so on triple Q over here. You can apply the same kind of methodology that I mentioned on SPY to triple Qs if you wanted to. Also looking at Alibaba. So Alibaba, they got fined $3.5 billion for antitrust by the Chinese government. Excuse me. This might mean that tomorrow they will actually break below that support area of 220 and possibly touch that 210 area of support. So we have heavy support down over here. Let me move the line down over here as well, right? So I'll be looking at going long Alibaba around 210. Failing that, next level of support is 190. But we have seen a lot of news around Baba the past few months. It's pulled back sharply, then it pops back up a little bit, pulls back sharply again, pops back up again. So any kind of serious dip, I'm going to go long on that and ride it back up again temporarily, not for a long-term play, but for a short-term swing trade back to the upside. So if we pull back to 210 or 200 perhaps, then I would expect to swing back up to 220 or so for a 10% move, and using call spreads perhaps on elevated implied volatility. That would be a way that I would play it, right? Given that the move is not already occurred, the downside, which we're likely to see tomorrow, I won't suggest a play on that, but you can use your imagination on call spreads after we see it pull back down to 210 or 200 even, right? Also, we've seen ExxonMobil is one of the mega caps that's pulled back drastically the last couple of weeks. It pulled back from its high of 62.50 down to now 55.81. It's down now in the last couple of weeks. Draw a line over here. We're down about 11.5%. So oil prices are still in recovery right now, and I don't think we're going to see that stop right now. So XOM might not be a bad longer term play. Again, on the long term chart, you can see on the 5-year, right, there's upside to 70 and then perhaps 80, and again, longer term it could be 90 or so, right? So not a bad play for one of the most powerful oil and gas companies on earth, right? Otherwise, we'll look at Visa as well. That was requested too, right? Visa had a pullback on Thursday, I think it was, and then recovered back up. It's near all-time highs. And here is the 1-year chart, right? So again, we pulled back sharply down to the 205 area a few weeks ago. And since then, we've recovered up to 22, not too far from the all-time high of 228 or so. They have earnings in a couple of weeks as well. Let's keep an eye on them. And also Amazon, AMZN, right? They've had a nice run the past week or so, right? They recovered last week about $180 per share, which is pretty substantial. In the last 2 weeks, they've recovered about 10% or so, or 13%, sorry. And again, they have earnings in a few weeks too, and we could see them push that all-time high of 35.52 as they've not yet hit it. So Apple and Amazon, AMD are the 3 of the bigger tech players that have not hit all-time highs yet. Google is at all-time highs. Facebook's at all-time highs. I'll show the charts there. There's Google right here. You can see all-time highs as of Friday. Facebook, same thing. On Thursday, they had all-time highs too, right? Over at 315. Netflix, not too far from all-time highs either, right? You can see all-time highs are at 593. They're at 553. A couple of good weeks. You see them go higher. However, there's been reports that they've been losing customers to competitors. So it's possible we see a subscriber miss in the next quarter. Speculation there, obviously. Otherwise, that's pretty much it for the week ahead that I'm looking at. Actually, you know what? I'll mention also Rocket. Rocket, again, it's not too far from that area of 20, which is strong support. This is a strong company that's very, very profitable right now. And I think people are underestimating it right now and kind of forgetting about it. I think it's going to be a very, very strong performer the next year or so. So if you're looking at a cheap entry point on a quality company, of which there are very few right now, given the market's kind of frothy, this might not be a bad one to look at. Also, I want to mention too was Intelia, right? So I mentioned that a few weeks ago. I mentioned it when it was around like $60 or so, and it popped up to 85, fell back down to 70. Again, CRISPR stocks, I think, are going to do very well in the long term. So if you're looking for long-term investments that have high growth potential, again, they are speculative because they're not generating that much revenue right now. But looking forward, 5 years or so, if you have cash that you want to grow at a rapid pace, not a terrible idea to look at companies like Intelia, CRSP, CRISPR Therapeutics. There's Editas, and there's also Beam Therapeutics as well. So here's BAM, right? Here is, and again, you can see that Beam is near support of 70 right now or so. Editas right here, near support around 35. And then you have CRISPR as well, CRSP, and they are not too far from that support level of 100, right? If they have a couple of bad days, back down to 100, not a bad area to look at going long. Again, do your own research, understand what they do in the potential, and whatever you put in, you need to be willing to lock that up for a few years, because this is a longer term thesis that I have myself. But again, do your own homework, understand why you're investing in a company. Don't watch a video on YouTube and rely on that information, because a lot of people don't know what they're talking about. And I'm wrong as well sometimes too, right? So keep that in mind too, guys. I'm gonna cut it off over here, and we'll break into some Q&A. But if you guys enjoyed the video, like, subscribe, whatever. Throw a comment on if you have a question or something like that. And appreciate your time, guys. We're gonna do some Q&A right now. So.